All right, welcome back to Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy. Thank you very much for joining us, if that's what you're doing. If not, if you've been with us all day so far, it's my job to make you stay. So let's see if we can do that. We're going to have a hard time. Some of these markets, it's going to be difficult to make somebody watch all 5 hours, but we'll see what we can do. Why don't we jump in and see what the markets are doing for us right now? And we're still around where we opened up, 15.5 cents lower in SEP corn. That's $6 even and a half cent there. And we've got a decent range over there already. So what's that, 25-cent range? So we got 16 cents lower in new crop, 604 even is last in the D's. All right, moving over to see what's going on in the soybeans for us today. They are adding on to their losses of where we opened up by a penny or two here. August is off 50 cents on the nose, 15.87 even is last. And we're about, what, 2.25 cents off the lows there. Novi new crop, 59 cents lower. I guess we're at risk of losing that 14 handle. 14.09 and a half is last, and we're just off the lows by about, say, 3/4 of a penny. Moving over to the wheat, what's going on in Chicago wheat? Well, it's lower, and you wouldn't be surprised to hear that, would you? 17 cents lower in SEP, 7.90 3/4 is last. We've got March, which is the middle of the deferreds, middle of the curve, as I'd say, 16 cents lower to 8.27, and that's about 6.5 cents off the lows there. Hard red wheat in Kansas City, the HRW, 19 3/4 cents lower in the front SEP, 8.54 3/4 is last. While March, the middle of the deferreds there, is 18.5 cents lower to 8.67 3/4, and that's about 4.5 cents off those lows. Spring wheat in Minneapolis, 11.5 cents lower. That's not as bad as it was, I guess. SEP is 8.94 and a half last. Well, we've got March 11 3/4 cents lower to 9.18 and a quarter. And then finally, let's take a look at cotton. This has been a dog. Cotton's off 333 points here in that T's contract to 93.41. I'd like to bring in my next guest analyst, who's actually in studio, Mr. Chris Swift from Swift Trading. Thanks for joining us.
Good morning. Always a pleasure.
All right, I just got the 2-minute warning.
Okay.
What do you got for us here? The floor is yours. What do you think about these prices?
Pretty much in limbo right now. We've got a couple of factors out there where USDA has not come out and showed us where they believe any of the reductions in either yield or unharvested acres have taken place. Most of the private forecasters are out there saying we have some kind of reduction in it. And then this morning we see that heat is probably not going to build near as far east as what they thought it would. So maybe some of the beans and corn in those areas that need a little bit of break, they're going to continue to get that break.
So I've had some analysts say that it's more about some of the grain getting out of the Ukraine. Look, I mean, shame on us. Fool me once, shame on me, fool me twice, right? I'm not quite sure about that, but at the same time, it seems to me that just by getting out of bed this morning, looking at the prices, the first thing that comes to my mind as an old trader is it looks like we snuck some precip or cooler temps in. That's what it looks like, right?
Right. And the oil market, energy markets are down sharply again this morning. So just kind of lost that momentum that was a real good build last week.
Right. And so I think everybody really needs to know that when you say something like, say, oil market's lower, you know, oil is got about an 80% correlation with corn and 60% correlation with beans. And well, why would the oil market be lower? Well, folks, I know it might be a surprise to somebody out there, but we're not doing too well with our economy, and we also got some bad news out of China about their economy. So if people don't have jobs and don't need to drive, what's the price of oil, right? And so when those things start to fall, it doesn't take much to pop that bubble of hot and dry. If you know what I mean?
Yeah, and everything kind of tapes along with it.
Right, and so that's something, I'm glad you brought that up, but that's an important part of this because it's not just a grain trade anymore, it's a global trade, and we have to keep all those other products in mind because, again, I think you're right. I would have to say that I think this is a global slowdown sell-off more than it is anything else.
Right. Because we still like, another 2-3 good weeks of harvest before we know anything of really what's going to happen. And we're just going to start off in the south, and it's going to be in the worst. And finally, when you get into October, you'll get into the north and have a little bit better yields up in there regardless.
All right, don't move. Stay right there.
Got it.
We're going to go away. We're going to pay some bills. We're going to come back and talk more with Chris Swift after this. All right, welcome back into Market Day Report. We're still with Chris Swift. He's been kind enough to stick around. We're going to go through some of these livestock prices real quick, and then we're going to get Chris's take on what we've got so far shaping up for us here today on a Monday morning. Let's look at live cattle. What does the live cattle market got for us? Well, it's quiet, isn't it, Chris? I mean, boy, we've got August is up a dime to 136.55, but I always tell people, look, we only have about a 70-cent range right now. So small range, small change usually means to me not a lot going on. I don't want to make too big of a deal about that right now. Let's move over to see what feeders are doing. Are they liking a lower corn board? Yeah, I guess. We're up $1 in August, the front month there, 179.57. But look, September's up $1.35, 182.90. And then we've got a $1.30 rally in October to 185.02. And then finally, let's take a quick peek at what's going on over in the lean hogs. They were lower last time we checked. They still are. August is off 95 cents to 119.70. Let's go to the middle of the curve and look at December. That's off 62 cents to 87.22. Well, sir, you're a meat expert. What are your thoughts here?
Well, in the cattle market, we're dealing with two different worlds. Right now, up front, we have ample plenty beef on hand because of cold storage, and have ample plenty cattle on feed, a little over 11.3 million head. And we're still got a real elevated cow slaughter, but yet we don't have the consumer out there spending at quite the level that they were before. And then you fast forward 4 to 5 months from now, and you're going to have an extreme shortage of cows and heifers out there because they've all been brought into the kill mixture there, and you're going to come the spring of the year with a very, very short supply of cattle.
Okay, well, that can't be a secret, right?
No, it's not.
All right,
No.
So do you think prices are reflecting that yet, or are we
think they
kind
are.
of asleep? Okay, they
Yeah,
are.
I think there. If you look in the back end, we're carrying a $9 to $10 premium to the
Right.
feeder cattle futures, and that's about the only place you have to hedge, regardless of what kind of production that you are side in. If you need incoming inventory, that could either be a heifer, but you could use those prices as an ability to hedge against incoming inventory.
So that won't be a surprise. What could be a surprise is how much money the consumer has by then.
I think that's going to be the real trick of it. We don't see much change in third quarter beef supplies at all, so it's all going to hinge on the consumer and how much that they decide that they're going to have a willingness to increase to spend or to consume.
All right, good stuff. All right, really appreciate that. That's Chris Swift from Swift Trading. I'm Scott Shellady here in Nashville. I guess we're going to go away to break. We'll be right back after this.